Hi, I'm Pattu from FreeWinCal. So this is the stock portfolio update for September 2021. Regular viewers would know that I have been doing this for the past few months. And a quick introduction to this. So this stock portfolio started off as a basically it's an experimental project for me. I wanted to pick stocks without too much of research, with practically no research, I should say. That was because I was convinced that finally, after several years of thinking about it, that picking low volatility stocks in the large cap space is a reasonably safe idea, not only to get some returns but also some dividends. Now, when I talk about dividends, I am at that stage in life where I'm trying to build a diversified retirement basket where I have some sources of passive income, some sources of active income. Then there is the standard equity debt mix and so on. So I am at a different stage from other what other viewers may be. And but in general, I see that a lot of people are scared of dividends because they are now taxed. I think that's not a good attitude to take, because in any case, once you buy a stock, and even if suppose it becomes a multi-bagger and they start giving out dividends, you have no control over it. So dividends are an eventuality in any long-term stock portfolio. It's just that I have decided to not go through a waiting period and start getting dividends from day one, and that's the only reason. And the other thing I see is that people are very scared of buying expensive stocks. And I think when you look at a expensive stock, especially stocks that have traded close to their all-time highs for most of their history, that means that they have a very robust business. That's probably that's the market's validation that they have a robust business and the market is willing to pay that price. And such a stock will not generally come down unless there is a market-wide crash. Good stocks will not come down to lower values which people can afford and so on. That's not going to happen. So I don't mind buying the high expensive stocks, because I believe that's a sign of quality. And you shouldn't buy stocks that suddenly go up and for no reason, without any rhyme or reason. Stocks that have gradually moved up over time are generally a reasonable buys, in my opinion. I'm not an expert, but now it is no longer an experimental portfolio. It now has it's about 12% of my equity. I think it's 12% of my total portfolio. Yes, it's 25% of my equity mutual fund portfolio and 12% of my total retirement portfolio. So it's no longer a small value. It's no longer experimental, but I have also become more confident about it with time. Now, before I get to the weights for this month, the way I do stocks, pick stocks, is I look for low volatility in the Nifty top 100. That's the large cap space, and I'm looking for a business with very little debt and strong business health. I use simplywall.st. I'm a paid member there, but you don't need to be a paid member for doing basic stock analysis. I do that because I need it for the transactions and so on. I track the transactions there, and I also have my own XIRR sheet for calculating the stock returns and so on. And so I haven't worried too much about weights. Some questions that people ask is, what do I do about the weights? I don't worry too much about it. Within these 11 stocks that I have, if certain stocks are moving up, if they have momentum, then I follow that momentum within this space. And so far I have not sold anything large. I have sold some duds like Vedanta, Coal India. That was during the experimental phase when I had very little exposure to them. I didn't mind. You just gain or lose a few thousands. It's not a big deal. So I've gone past that stage now, and this is more. Hopefully, this stock portfolio will be resilient to change. But change is, if I have to get rid of one in this, then it can be a problem, because the weights have become higher and higher over time. So Asian Paints is the highest with 18, almost 19%. TCS, Infi, Pidilite, HUL, HDFC Bank, Dabur, Wipro. So this there are about 4 stocks with less than 5% exposure. I probably will try to push exposure. I mean, increase this weightage. Let's see in the coming months. So I have my own sheet. This computes XIRR of stocks with taking into account all kind of corporate actions, dividends, splits, etc., bonuses, etc., and so on. The thing is, many stock investors make the mistake of assuming dividends are payouts, and that's extremely wrong method of calculating dividends. They have to be reinvested, and then only the XIR has to be computed. That sheet does it, and what I'm going to do, show you does that. So what I've done is I've entered the numbers there, and these are the XIRRs. Most of the investments are fairly young, about 1 year, roughly about 1 year or so. So that's why the XIRRs are very large. They will come down with time. There's not a big problem. So what I've done is I've compared every transaction I have made with both Nifty 50 as well as Nifty 100 low volatility 30 index. So if I look at the absolute return, which is the sum of the capital gain returns plus the dividend return, that's 41% for the stock portfolio. The UTI Nifty fund has got an absolute return of 29%. The Nifty low volatility 30, Nifty 100 low volatility 30 index gives you a absolute return of 30%. Of course, this is before expenses. If you remove the expenses, it will also become about 29% or so. So the CAGR of the stock portfolio is about 38%. The UTI Nifty is about 30%, and low volatility index is about 32%, roughly, again before expenses. If I calculate the XIRR, it's 35% for the stock portfolio, 31%, almost 32% for the UTI Nifty fund, and the low volatility index is about 33%. So it's not so bad so far, but I mean, all these can change quite rapidly in the space of a month, and also it's a fairly young portfolio. The returns will keep coming down. They'll keep falling down with time. They'll stabilize hopefully, and of course, if there's a big crash, it will also crash and so on. We have seen that happen in mutual funds. It's going to happen here also. But it's something that I'm also learning. But so far, it's been a reasonably pleasant journey. Let's see how it goes.